What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how to make money whether price action goes up or down when trading the Direxion triple leverage semiconductor bullish ETF, which goes by the ticker symbol SOXL. Make sure you're following us on X at Bullish Chips, where you can get real-time updates on our entries and exits, and not only our scalps and day trades, but our mid and long-term trades as well. We also provide commentary throughout the day as to pointing out major levels, looking at internals for the Qs, and other information that might be helpful in the trading day. Make sure you're subscribed to this channel and hit the notification bell. That way you're notified whenever we do drop new videos. We release new videos every day during the week and one day on the weekend. If you like this video, at the end of it, make sure you hit the like button. It helps our channel grow and helps expose a great trading plan to more people around the world. Please remember that we are not financial advisors. We do not offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we think price action will take us in the future. So without any further delay, let's get into the charts. We'll quickly go over what price action did today. We'll look at things from a wide angle view, and then we'll put together our notes, which will contain the triggers and targets for tomorrow's trading day. Some of those targets for the trading day will roll into triggers and targets for the week and month as well. So we want to always have our notes up to date. That way we can make sure that we are getting good entries, good exits for good risk to reward on these options that already have great risk to reward ratio in terms of delta to theta and versus the price of the premium with the amount of beta that you're getting from the underlying stock. So let's go ahead and get into the charts. You can see we're looking here at a day chart. We're still running into the same levels that we were running into before. We're still in the range that we've been in for the past 3 or 4 weeks. We went back to the bottom of the range like we talked about yesterday. Went there a little bit quicker than we kind of expected, but we were ready for it, and we were able to capitalize today not only on the swings that we had overnight. Those were up real big at open, but we were able to add to those at different points throughout the day, lock in profits and leave some runners. So from the day perspective, a big 2 down. If you're not familiar with the strat, it's a method of identifying price action with either a 1, a 2, or a 3. This was created by Rob Smith. If you're not familiar with him, check out his YouTube page. It's in the there's a link to his page in the description of this video. Smith's in the black. Rest in peace, Rob. He did pass away a few years ago, but his method, will stand the test of time. There's plenty of information about Rob on the internet, so make sure you do your own research and find out the information that you need to find out about his trading method. But it is a big part of the method of trading that I used to trade. So we had a 2 down day today, a pretty large 2 down. And again, like we said, we were at the top of the range yesterday, which happens to be the year flip, which is 2813. You can see how we've rejected off of it once, twice, 3 times, 4 times now. But we're not, going too far on each dip, right? We're just going back to this $24 area. We do have this green not broadening formation, but downtrend line, which the green signifies it's a monthly downtrend line. If you're not familiar with our videos, please check out the description as well. There's links to a couple of short videos of how we set up our charts, what the different colors mean, and the different indicators that we use. We don't use a lot of indicators. Again, it's mostly based off of the strats, so we use broadening formations, a couple of trend lines if they're major, and every once in a while we bring Fibonacci out for major levels as well, for major moves like the 2020 low to 2021 high. So they're not, the videos aren't too long, but they do give more detail as to what we use to mark our charts. So just getting back to the price action, again, we're at the bottom of the range, If you remember, we had the initial broadening formation that formed pretty wide once we got the higher high and the lower low. But then once we got the higher high and lower low again, the range had tightened. The broadening formation had tightened, and that's signified by these tighter orange lines. Now we have at least wicked below that broadening formation, and you can see that for a time being today, we flipped the month and the quarter red as well. So this is the month and quarter flip, which is 2438. You can see up here in the left hand part of the page of the screen, we have the day, the week, the month, the quarter, and the year. Currently we've had the month and the quarter green. We've tried to flip this year green right here, this line, and the week has been between green and red. It's been a 1 all week, an inside bar all week until today, where we did get the 2 down, which if you follow this channel, you would know that's something that I was actually kind of looking for. And it may work out perfectly. I don't want to say perfectly, but it may work out well. We will see what tomorrow brings. There were some pretty big earnings today after the close. The market not being very too receptive to them in a positive manner. Most of the market is red after hours, but we'll see how tomorrow goes. From the week perspective, I was looking for a possible 3, 2 down, 2 up. Looks a little bit more out of reach. Well, not so much out of reach, but it's not as enticing anymore because it would take breaking above the top of this week. Next week we would have to break above the top of this week to trigger it, and the magnitude would only be the high of the candle to the left of this 2, which is the 3. And you can see there's not a lot of room between this high and this high, so it wouldn't be a lot to trade for. But if you wanted to take it as like an entry for a longer period of time, maybe November, December, January 26th, to be safe, it could be what flips us green on the year, which would flip us into full time frame continuity, where we would have the week, the month, the quarter, and the year green, and we may continue to push up, riding this weekly broadening formation that we have here, this purple line, right? And if we were to break above it, we've got this gap here, right? These teal boxes represent gaps, right? So we've got this gap here at 39. We've got another gap up here at 49. I wouldn't guess that we're going to go up that high anytime soon, but this could be some a type of magnet for a slow churn up. Now we've got a couple things working against us. Just how enforced this 2 down is. If we don't recover tomorrow and bring it back up to flip it green, or make a hammer or something out of it, that's not the most bullish signal if we can't do that. We also have seasonality that's going to be creeping in. August is the start of the worst performing time in the market for tech, which is August, September, and bleeds into October sometimes as well. So again, as we've been talking about for a couple weeks now, ever since the range was defined by the daily broadening up here at the top of this move, after 7 weeks of 7 green weeks in a row. Let's go back to the week chart. If you remember here, this is the first 2 weeks after 1, 2, 3, 4, 5, 6, 7 weeks in a row of green action. So we came up, we hit this monthly downtrend line. It gave us some resistance. It did coincide with this year flip and this weekly broadening formation. So and actually this is a new weekly broadening formation. The broadening formation that was here previously was like that. So we ran into that. So we had multiple major markers that were signaling resistance, and that's what we got. So the last 3 weeks we had compression. Even though it was green, it was still compressed. Last week we had our first little break to the downside, and now we've had it was a slower push down at the beginning of the week, but we had our flush today. If we go in and look on a shorter time frame, we can see here that, and actually I'm going to bring in, so we've got a daily broadening formation, right? See if I can tighten this up a little bit. So we have a daily broadening formation coming off this low and lower low that we had the previous 2 weeks. So you can see we came back down to it. We got a little bounce off of it. Like I said, it did wick down into this month and quarter flip, but it's acting as support for us, just like the year flip is acting as resistance. So we're maintaining that zone, although it does look like we're starting to creep down a little bit more. You can see this orange dash line. That's a daily downtrend line. So that's yesterday's high and the high from last Monday. It was a lower high on the day frame, and we've made a lower low now, so that locks in that lower high. So technically we are in a downtrend on the day. We set the lower high and then a lower low, so we've started a downtrend. Again, we swung put a couple puts overnight. We were able to hold on to them, at open and sell once we hit. We had a target of the top of the gap from yesterday, so we sold. We left a runner, and then we waited for the lower high. This is a 15-minute chart we're looking at. We waited for the lower high on the 15. We got that. Once that triggered a lower high, we bought more puts. We sold the runner that we left from over here, and then half of the puts that we bought here. Once we closed the gap, we waited for a retest of the opening of the gap, or the top of the gap. We didn't quite make it there, but we got the lower high again on the 15. So once we broke below this to this low to lock in the lower high here, we bought more puts. We were able to ride those down. We did end up selling most of everything at this daily broadening formation. We didn't get the last little bit. That's fine. We don't need to top tick or bottom tick anything. We got a majority of the move. The move was what we were, not necessarily expecting, but we were ready for, because we had our triggers and targets to the upside and downside. Another thing that came into play, if we pull some Fibonacci's up, this 2601, this is the 78.6 of the 2020 low to the 2021 high. This is the 78.6, and we pointed out yesterday that it could be a possible bounce point for a half gap fill, because just as often as there are full gap fills, there are just as many times as half of the gap will get filled. We said 2601 looked like it was about halfway, and that's exactly where we got the first bounce from. If you remember, if you're following us on X, you'd have seen us pointing that out once again. And then once we broke down through it, frankly, I thought we had gone pretty far for the day. Not to say that the push down wouldn't continue, but I thought it was losing a little bit of steam once we got down around the daily. I don't know why this is not on the, it's because this was the fibs, but once we got around this daily broadening formation, so I did want to take a little bit off and just leave the runner. So we still have a runner left. Looks like SOXL is down 1.8% in afters, so that swing is looking good as well. We also have the puts for August 15th that we've been swinging. Those are now up 40%. And again, we're just hedging against the calls, the longer term swings that we have. We don't have our November swings anymore. We rolled those to January 27, but we do have January 26 expiration contracts. We have the August 15th, like I mentioned, and we have some September contracts as well that we bought here at the bottom of this range previously. So those are actually a little bit negative right now, because like I said, we bought them at the bottom of the range, but the bottom of the range was a little bit higher than where we closed. We bought them up around this 25.25 area, 25.25, and so yeah, they're a little underwater right now, but again, they're till September. We are lighter on those right now because we just started a position, and we know about the seasonality for August, September, October, so those are kind of a have some skin in the game just in case we continue to push higher type of thing, and pass up seasonality. If that happens, then we're still in the game. They won't be counting profiting as quickly as August calls would, but they offer us less theta in exchange, so we're not losing as much value of the contract every night that we're holding it. And so it really works out in the end if we get the push up. If we get a signal, especially on the week time frame, we've already got the signal on the day time frame that we should be pushing lower, right? This is the lower high right here. So this is the lower high that we got on Tuesday, and this is the lower low. So we've technically started this downtrend. This line signifies that. We closed below this weekly uptrend line. We've got a daily broadening down here and a gap as well. So we're ready, right? We're still ready for further downside action. We have further targets. We have triggers. We'll get into our notes and here shortly so that we have those marked out. But this downward action hasn't surprised us. If you follow along with us on the videos or on X, you shouldn't be surprised either. But that's just how things are going right now, right? It's still not a totally bearish picture, right? We're still, one could say, in a bull flag, right? A lot of times bull flags will slant downwards until they're ready to pop, and then they pop, and when they pop, they go the length of the flagpole, right? So if the flagpole was from $16 to we'll just say $24, $16 to $24, that's $8. So we should, if once we break out of our flag around this maybe $27 area, 27 and 8 is 35, so we should get up to this 35 area, which is a higher high on the right. This would make a higher high if we get up to 35. We're getting into this second higher high area on the week. Go back to the week. Remember, we have this higher high up here, and if we take the month, if we take a look at the month chart, 35 would take us above this this right here, which would trigger the 3 combo 2 down, combo 2 up, and would give us a target, a magnitude of this 36.15, which 35 is just right around there as well. So it could just be this slow creep up that we were talking about, going up this weekly broadening formation. If we break through this monthly downtrend line, there's nothing else like major other than this weekly broadening to hold us back at this time. So I guess you could bring in the fibs from the 2020 low to 2021 high. The 61.8 is here at 30.55, but you don't have the 50% until 38. So 35 is still really reasonable. 35 is the 61.8 of the 2024 run up. So 35 sounds like a good number to me if we are to continue to push up after this little flag or pullback that we're experiencing right now. At the same time, we do need to recognize that it is a new month tomorrow, right? August 1st is tomorrow. So one thing we need to do, and this is for our notes, so we're starting to move into our notes. We need to move our triggers, our triggers and targets for the month chart, right? So we need to take this Fibonacci, which I've only got the 100, the 50, and the 0 available, and it's in green, so that's our monthly indicator of the high, the 50%, and the low of last month, which is July. So we've moved that, and we can now set up our new triggers and targets for the in our notes. So let's go to our notes real quick. We'll make a new note. This is for Friday, August 1st. All right, so there will be 103 trading days left in the year tomorrow. These notes are from July 31st. The close price is $24.98. $24.98. And the week is still going to be valid because it's still the same week, but the month is changing. So we got August. We don't know what will flip it red or green because it hasn't opened yet. So we will put that out there, but we can change our triggers and targets for August, because if this were to go 2 down, again, I'm just referring to the strat. If this were to go 2 down tomorrow, or next month, that would be a 2 up, 2 down. And, there's a decent chance it could go down because there's this inverted hammer that we've got here. Now, the difference is, if you're, familiar with the strat, we would call this a Momo shooter. This is a momentum shooter. A shooter is just another word for an inverted hammer. And the reason why we'd call it that is because it's the same color as the direction of price action right now. So it's still a green candle, and it's just it's going with momentum. So let's see if we can find a Momo shooter on the month some other time. Yeah, so we've got Momo shooters here. Momo shooter, but price still continued to go up. Now, eventually it did pull back, right? So it could be an indicator that even if we do go up, it's losing steam and we're pulling back. That's kind of what the wick is telling us. You had price action go up, but it got pushed back down. But at the same time, we know about how SOXL can move. We know how news driven this market is. If we get a catalyst, that turns into a Momo shooter, and we get another candle like this right next to it, and then you don't think twice about it. So we could go back down to like the week level and find plenty of Momo shooters. The point is probably driven home, but I just wanted to make sure that everybody kind of knows what we're looking at from a candle structure. So although it could be a Momo shooter, again, because of the wick, it could be an indication that bulls are getting worn out up here. They can't make it stick. Bears are pushing back, and prices could be heading back down. So we could get the 2 up, 2 down. That would trigger once price goes below the low of this candle, which is 23.58. So this would be a 2 up, 2 down. Trigger is 23.58. And the magnitude would be the low of the 2 prior to this 2. So the low of this candle, which is 1604. 1604. Now we can put some extended targets out here because we've got things like this gap. We've got this the full pullback of the 2024 run up, right? And a weekly uptrend line. Got some other gaps down here, so we can have some extended targets. Let's go ahead and mark some of those out. The first one for me would be the top of this gap, like we've discussed before. There's plenty of times that gaps gaps will not be filled. They're a bounce point, and that gap is just left for later to be filled later. So the top of this gap is 1510, so we'll use that as a extended target. The close of the gap is 1447. We'll leave that and just use the 1401 marker, which is the full pullback of the 2024 run up. Again, if we shrink this down and bring it out, but that's why we have them color coded, so that we know just by looking at this color and seeing that it's the 100% retracement, right? So and we know that this color is for the 2024 run up. So just zooming back in a little bit more so that we can identify targets for the strat. 1401 would be our next one, and then I would say the bottom of this candle would be the next target, so that would be 1205. And we'll just get rid of these old ones we had from July. Now, do we have a new lower low? No, the lower low is still oh no, we do 723. I don't have that on here. Yeah, 723 is the lower low. So this is also another target. If momentum really gets going, we've got a bad economy or bad news, just all kinds of things driving the market lower. This could be the bounce point, which is, I believe, where we went to. Yeah, that's April. Yeah, the April 7th low. So we've got gaps down here. They may not fill because those are pretty low, but the 7, they could get filled if we're going to go make a lower low on the monthly time frame. So the $7 could still be in play. Let's go ahead and continue with our markers to the upside for the month. So right now we are in this combo 2 down, right? So this 2 down, this 2 down, this 2 down make a combined 2 down, and then this combine 2 up with this 2 up, 2 up, 2 up. So we're in a combo 2 down, combo 2 up, which just equals out. If you just make in your mind, that's one red candle, that's one red candle, right? That would just make the target the top of this candle. So 32.64 is the target for the high. Oh, and this is underlined and in bold because that was the strat that we were in at the time. We're going to undo those because we have to wait for tomorrow to open to let us know whether we're going to continue the strat. But again, the trigger is the high of this candle, which is 28.50. 28.50 is our trigger. And the magnitude is the high of this candle, which is the 32.64. And we don't need to make new extended targets because unlike making a lower low here, making a reversal here, we would just be making a continuation here. So no need to mark those up. So we can leave the week's triggers and targets because we're still in the week. The one thing we do want to do is mark this underlined because it has triggered. Are we still in force? Let's double check just to make sure. No, we're not still in force, right? Because price closed within this wick. So price closed within this candle's price action. So it's not still in force. It's triggered, but it's come back within. So it's not still in force. So we're just going to leave it underlined. It's not going to be bold. Okay, so we've got the month, because it's a new month, taking the triggers and targets taken care of. We've identified that the 3-2 down has triggered on the week. Let's go ahead and first let's get our expected move for Friday. So let's pull up. Oops. Let's pull this out. Let's go to trade. And if we look at the options chain for SOXL for this Friday, which is tomorrow, we can see that the market makers expected move is $1.44. So we'll mark that in here. It's $1.44. Again, price is at $24.98. So that would be to the upside would be $26.42, and to the downside would be 23. I'm sorry. 25. Yeah, 23. 50. Oops, 58. 23.58. All right, so let's take this range here. Let's go ahead. Oops. What did I do still? There we go. What am I doing? Come on now. There we go. So let's go back to our charts here. And we're going to go down to our swing chart. And let's bring it down to a 4 hour so you can just kind of see it better. And we can see again, this purple box is the week's expected move. You see how we rejected off of that once on Tuesday and again yesterday, and we're back down to the bottom of the range here. Now there is more room to go down for the week's expected move. So this 23.50 is last year's low, so we could easily go down, test that, and still remain within the week's expected move. This orange box is Friday's expected move, so we're going to move it from last Friday to this Friday. Alright, and the expected move was there, so we'll go ahead and get these numbers put in, and we've got our range. We hit OK, and you can see that it's moved to tomorrow. Oops, why is our that's 1 day extra. There we go. So that's the week's expected move. That orange box is Friday's expected move. So we'll go ahead and do the same thing on the day trade chart. Edit. Alright, and our range is here. So we'll set that range up. Alright. And that moves our expected move for tomorrow on that. And now we'll get into the real messy chart if you're zoomed out. And we'll change the scalp chart to the same thing. All right. So there you have it. Just like that, we've moved our expected move for Friday. So now that when we're zoomed in, say we gap down tomorrow and we're zoomed in on a 5-minute trying to look for a lower high. All right. Oops. Just for example, say we're doing that tomorrow. Say we gap down. We can know that, if we're opening down here, we've got the bottom of the day's expected move, the bottom of the week's expected move, last year's low, a 15-minute broadening formation. There's a lot of stuff here to indicate support. So we may not exactly want to, enter too heavily on puts, with a lower high here. It may just make a lower high just to make a higher low and then continue up, right? So you don't want to be too heavy or around too many support indicators, and the expected to move is one of those indicators that can help us, right? So let's go back out to the 4-hour and let's move our 4-hour markers. Let's get this zoomed back in right a little bit for us here. Come on, thinkorswim, play nice. Here we go. Again, this is a little hard to read when we're kind of zoomed out like this, but it all makes sense once you're once you are in the thick of just trying to scalp or day trade or something like that. So let's take the previous high a day and we'll move it to today's high, and then we'll take the 4-hour trigger to the upside. We'll move it to the high of the second 4-hour of today, and then we'll take the the 4-hour trigger to the downside and move it to the low of the second 4-hour of today, and we'll take the previous low a day and move it to today's low. All right, so we'll get off that messy chart and let's go to the day. We just have one other chart to do this for. We only move these markers on the scalp and day trade chart that we have. We don't really need these for swing trades. I guess you can use them for swing trades, but these indicators are really more for entries and exits on scalps and intraday trades. Again, if you aren't familiar with what these levels are, check the short videos out in the the video description, and they'll give you the indicators of what we're trying to do here. So we'll remove the price level 1 here in peach, which is the opening print for today. That's where price opened. Remove price level 1, and basically what it comes down to is, tomorrow, wherever we open price, wherever it opens, we put an indicator for opening print, right? That's where price opened for the day. If we are above opening print and we get like a higher low, then our first target to the upside would be the 4-hour trigger. If it's already triggered, if we're above that, if price opened down here and we got the higher low here, the first target would be the 4-hour trigger. That 4-hour trigger would then roll into the day trigger. So our next target would be the previous high a day. All the while, we also will have the overnight low and the overnight high charted out tomorrow. Once we open and we know what the overnight high and low will be, and those act as targets as well. So for day trades and scalps, we have very clearly defined entry points, exit points, risk to rewards, and we know exactly what we're trying to do. Anything, if it goes beyond any of those markers, then that's where we go back to our notes and we're looking at the 4-hour triggers and targets, the daily triggers and targets, the weekly triggers and targets, and we can look at where price may continue to go to. That's what we had to do today, right? It went past what we expected it would do if it did start going down, and so we quickly could switch to our notes and see, okay, these are the next targets to have, since we still have momentum to the downside. So let's go ahead and remove today's opening print from our swing trade chart and from the scalp chart as well. Okay, so let's get out of that. So now we want to set up our triggers and targets for the 4-hour time frame. And to do that, we're going to use this, again, the strat. along with our other markers. This chart is getting a little hectic, but we know what everything is. Actually, I need to get that back off of there because we added that earlier to show the old weekly broadening formation. But tomorrow, if we get the 2 down on the 4-hour, so now we're getting back to our notes here, it's going to be a 2 down continuation, right? So it's not a reversal, so there's no magnitude that is like a magnet that's going to suck price to that point. It's just a continuation, so we just have to use extended targets at that point. So the 4-hour, on the 4-hour, the trigger to the downside would be the low of the second 4-hour of today. So that's 25.45. Right, 25.45, and again, this is going to be a 2 down. All right, so 25.45 triggers it. There's no magnitude because it's not a reversal. There's no magnet, but there is targets that we can set up. So again, to the downside, the this 27.73. This is the bottom of the March 2025 range. So that's going to be probably a good, not probably, that is a good kind of point of control. You can see how it was resistance, at least for that day here. It was support here, right? So we can go further to the left if we get more days in here. If we go further to the left, you can see it was support here, resistance here, right? So we know that this, it's March 2025's high. We know that this is going to be a point of control. It should act as support if it's going to be support. So we'll use that as another target for our 4-hour 2 down continuation. 23.50 is last year's low, so that's going to be a pretty good support point as well. So we'll use the 23.73 as our first target. We'll use the bottom of the week's expected move as our next target, which is 23.19. And again, you may say, why are you it's not even $1 apart, but if you look right now, it's down 40 cents in after hours, and that is equivalent to 1.8%. So it doesn't take a lot to, for a big percentage loss or gain with SOXL at these prices, right? So we took out these lower lows already, those two. So we've got 23.58 as a lower low, which is this low right here. So our next lower low would be 20.28, and we just like to put these out here because we'd like to know where would trend continue, right? If we're making lower lows, that's not indicative of an uptrend, that's indicative of a downtrend. So it just is another indicator of, okay, if we're taking out that level, then we're probably not going to be pushing up anytime soon. Or if we take out that level, maybe that's just a sweep of that level, and maybe we are going back up at that point. Either way, it just lets us know we need to be paying attention at that point. So 2028 would be our next one. We'll leave those as those are. So let's go look at the upside. On the 4-hour, it would be a 2 down, 2 up, right? So this is the 2 down. If it goes above the high of yesterday's second 4-hour, which is this trigger 25.45, it would be a 2 down, 2 up. And the magnitude, because it's a reversal, we would have a magnitude, and we would expect targets. We would expect price to get back to the top of this this candle at least, right? If it's gonna be a true reversal. If it does not make it to the top, then we know that we're not in any reversal territory anymore. We're probably gonna be continue to push down. So the trigger here would be 25.45. 25.45. And the magnitude, again, is the high of this candle, which is 26.74. All right. we can have some extended targets out here. Let's bring up our scalp chart because I believe we got some other, yeah, that's so ugly. Let's get in here and look for any overlaps, because this was a fib extension we had to pull out on Monday, I believe it was, or Tuesday, one of the days where price action was so sideways. We had to pull this fib extension out. We left it out here because it's still kind of been respected. That's where it wicked off there, wicked off of it there. So kind of not paying attention to these as much, but we're looking for like an orange line. So I would say this 2706 is going to be our next one. That's a 250 fib extension of the Monday 2020, I'm sorry, not Monday, Monday June 23rd gap and go. So you can see how it's respected this level on an intraday perspective as well. And then we'll take the 261.8 fib extension, which is 2729. Right. We've got our higher highs here, but let's go ahead and make sure those are right. This high is 2813. No, we don't have that one in there yet. So 2813, that was set on Tuesday. So we've got our higher highs of 2813, 2850, and then up there at 30 in the 31s and 32s, right? So because this is a continuation, the trigger on the 4 hour is also the trigger on the day. Because this is a reversal, the magnitude for the 4 hour is the trigger for the day. All right, and we'll see that played out here on the day chart when we pull up the day. Let's get to our swing chart so it's not so as messy. Actually, let's go ahead and bring it out. Oops. Bring out to this one. Yeah, here we go. So on the day, we can see this would be a 2 down, 2 down. The trigger would be 2420. Wait, what? This low is 2420. Did I not mark last one right? To the downside, the 4 hour. Oh yeah, 2420. I don't know why I hadn't marked the high. So let's go there. We're good. Recognize that easily. So again, the trigger on the day is the same as the 4 hour. So 2420. Our target, because this would be a continuation and not a reversal, we just have to pick out targets. There's no magnitudes for us. So I would use this 2350 as a target, because 2358 is also last month's low, but 2350 is last year's low. So those would be some pretty good support right there, right? The extended target, again, would be the top of this gap, which is 2263. And then the next extended target would be the close of the gap, which is 2198. So those are some good extended targets. Again, we've already triggered the 3-2 down on the week, and we can see that an extended target for the week is 2198 as well. So that could be a reasonable landing spot for us tomorrow. It would be a $3 drop, which maybe could happen. If it just dumps tomorrow, well, we're already opening down almost 2%. So yeah, that could definitely happen. We're sitting at 24.50, so that would be 22. It's like $2.50. That's a reasonable move. And if we trigger that, you know, that could be our final target for the week, at least this week, until we, get to set our new triggers and targets this weekend for next week. So we've got our downside targets for the day. We've got our lower lows. Let's go ahead and get our triggers and targets to the upside. Now, if by some chance, actually, let's get rid of this gap. We filled this gap today, so get rid of that. If by some chance we go 2 up on the day, this would trigger a 1, 2 down, 2 up reversal, magnitude being the high of the candle to the left of the 1, which is just, again, this 2813, the year flip, right? So let's go ahead and get that marked out. The high of this candle is 2674. We got that there because it was the magnitude of the 4 hour a reversal on the 4-hour. So the magnitude is the trigger, and it's, let's go, oops, 2 down, 2 up, 1, 2 down, 2 up. The trigger, the magnitude is going to be, again, this high, which is 28.16. We've already got that from yesterday's triggers and targets, and we can leave our extended targets out there as they are too. So just like that, we've got our notes, and they've got so much detail packed into such little amount of space that we will know so much just by looking at these and referencing where price is at tomorrow, and how price has been moving. This is how we are, deadly accurate with our entries and exits, and how we maintain, making consistent profit on a day-to-day basis with trading SOXL. So just real quick recap, just to kind of where we're at. We hit the bottom of the range today, the range that we've been in for a few weeks. It looks like we could start to extend that range, possibly fill this gap, hit the daily broadening formation. But if we look at things from a week perspective, it's really not all that bad, right? We've had 7 green weeks in a row. Let's make this a little bigger here. We had 7 green weeks in a row. Kind of due for a little pullback. Look here, we had 1, 2, 3, 4, and a pullback. We've had 7, a little pullback. Could we go another red week? Possibly, especially if we don't fill this gap today. It's very possible we go another red week. A lot of times, the rule with the 3 is once you've breached one side of the 3 and then you get back to 50% of that 3, then you're almost guaranteed to go breach the bottom of that 3. So if price does come fill this gap, that would breach the 50% of this 3, and I would anticipate at least going to this 2028 level, the low of this 3. So again, it's not the end of the world. Look at the recovery we had since April. Again, if we do get a pullback to this level, once we get a reversal signal back up, I'd be looking to buy some more leaps, some more shares of SOXL. If we don't get the reversal, excuse me, if we don't get the reversal around here, and we're going to continue to go down to where maybe this daily broadening formation meets this weekly uptrend line, maybe bounce off the top of this gap. If that's going to be where we reverse, same thing. I'll wait for the reversal signal on like the week time frame, and then we can put some more money into leaps and shares. This whole time we've been selling covered calls on the way down, so we'll continue to do that if it continues to go down. Continue to bring in premium, set that to the side in a high yield savings account, or high dividend, paying stock like JEPI that's going to move sideways, not going to have a lot of fluctuation. That way we can maintain the value and plus get a pretty big dividend while it's sitting there waiting. But we wait for the bottom to form, and then once it triggers, we enter more once things look like there should be going back up again. So again, today's big drop, not something that surprised us. We were actually kind of looking for it, glad it came, and we're able to capitalize. So I hope you all were able to capitalize today as well. Again, if you like this video, please give it a thumbs up. It helps us spread the word about SOXL, and to me, it's just such a economical way to boost your your cash flow. It's again, the premium for the delta to theta ratio that you get is very low, and the beta in the underlying stock, the underlying ETF is high, so you're going to get big movements to the upside and to the downside like we've seen today. So today was a big paying day, not gonna lie. Really benefited from today, and glad that we took the chance to roll our Novembers to January calls and take some profit as well during that roll while we were up here at the high of the range. It's just things are going as we can handle them, as we've mapped them out, right? We're not predicting the future. What we're doing is setting ourselves up so that whichever way price action goes, we're ready to capitalize on it. So make sure you're subscribed to the channel. Give us a thumbs up if you don't mind. If you have a different opinion, if you have a different view, if you see something I'm not seeing, please leave something in the comments. I would hate to be blindsided by something that I don't see myself on the charts, and I'm always open to other people's opinions, especially if you are being courteous and respectful in the way that you disagree. I'll be more than happy to engage in dialogue with you. Again, like the video if you liked it. Maybe spread the word about this channel if you've been making money using our method as well. And yeah, get some good rest tonight, and let's have a good Friday tomorrow. I'll probably trade pretty light, be in and out in the morning, be in and then be out by the end of the morning, just because that's how I usually trade on Fridays. I like to kind of take the Friday afternoon off and just start to get into my weekend. But either way, we'll still be there on X, still giving updates, and trying to make sure that people are profiting. So let's have a good trading day.